Hey everyone, I hope you're all doing well. In today's video, I'm going to be showing you how to choose the best order blocks. And in order to do so, I've compiled a small list of order block criteria. We're going to be going over each of these points one by one in detail and applying them to real chart examples. So let's get started. So the way I'd like to explain this order block criteria is by showing you one step at a time in a real chart example. So we're going to start off on GBPUSD. Now we're currently on the 1 hour time frame. And this isn't exactly a zone that I would trade from, but I've labeled it here as basically a point of interest or an area of interest to wait until price reaches it and hopefully reacts to it. So that's exactly what we can see has happened here. We have seen a rejection from this 1 hour zone. So now we're going to go down to an entry time frame, which in this case will be the 15-minute time frame. So on the 15-minute time frame, like I said, we've already reacted to this 1 hour zone. So now we're going to start looking for some sort of structural shift in order to first locate our order block. Okay, so that's actually the first thing on the list is the order block caused a structural shift. Now without a structural shift, like a break of structure or a change of character, then there is no order block. So the first thing we have to do is identify our current structure. So our current high is right here. Our current low is right here. Now, I understand a lot of people might be looking at this and saying, well, that's a high. We only need that to break for there to be a shift in market structure. That is a bit subjective, but overall, that's not true. This is the major high. This is the major low. The reason that this isn't a major point of structure is because it didn't actually create a new low. We can see that we kind of bottomed out here, and price did not break through this low here. So before we get too ahead of ourselves, let's play price forward and see what happens next. So right about here, we see that that minor structure, that internal structure, as you may call it, has been broken. And that could trick a lot of people into maybe entering a trade too early. But again, we're focused on the major swing structure, right? And that would be, again, this high here and this low down here. So everything in between is just substructure, and we shouldn't pay too much attention to it. So what we're really waiting for here, if we're looking for a buying scenario, is for this structural high to be broken. And we can see that right there that did occur. So let me clean this up a little bit, and we will label our break of structure. Okay, so that's our break of structure. So that's the first thing checked off the list. We've located a structural shift. So the order block that caused that would be, of course, the last bearish candle before the bullish move that broke structure. So that would be this right here. As you can see, that's obviously the most extreme within this bullish leg. Okay, so we're going to just drag that out just so it is identifiable. We're going to label it 15M. I just like to keep all my order blocks and all my points of interest organized by labeling what time frame they were found on. So the order block definitely caused a structural shift. Now the next thing on the list is that the order block has to have created a fair value gap / imbalance. And that's exactly what we see here. Between this candle, the high of this candle, and the low of the next candle, what's in between is a huge gap in price. Okay, there was no equilibrium between buyers and sellers. There's just a big gap. So this to me is one of the most important factors when I'm locating an order block that I'd like to potentially trade from. This makes it much more high probability. If there is no imbalance involved, then I'm not very keen on taking an order block trade, like setting a limit on it and trading from it. I would certainly need more confirmation. But when we see something like this, it really raises my confidence level that this order block is valid and it's going to hold strong. So now that we've located the structural shift that occurred right here, we've located the imbalance / fair value gap right here, and we know that our order block is right here, what's the next thing on the list? Well, we need to ensure that the order block is in premium / discount pricing. Now we're looking for a buy position here, of course. So we want to be locating an order block that is in extreme discount pricing. And in order to do that, it's actually quite simple. Let's play price forward a little bit until it starts to turn around on us because we don't know where the high is yet. Okay, so it looks like this bullish leg is pretty much complete because we are seeing some downward momentum. So we can use the Fibonacci tool and drag it from the swing low down here all the way up to the recently created high. And on my Fibonacci tool, I just have the 50% line right there. As you can see, 0, 0.5, and 1. Very simple. And that shows me basically the equilibrium between the current price leg. So this is a bullish leg. Discount pricing means below the 50%. Premium pricing would be above the 50%. So if I'm looking for a buying position, I want to find my order block in discount pricing, so below the 50%. And as we can see, there's only one order block to choose from here, which is the most extreme here. Some might say that this could be an order block, but of course we always want to target the extreme, so we have a better chance of that order block being valid, and it achieves better risk to reward ratio as well. So we're looking at this order block down here. So at this point, we can check everything off of the list. The order block caused a structural shift, the order block created imbalance, and the order block is in discount pricing. So let me clean this up a little bit, and we can go ahead and set our position. So this is, of course, a buy position. I'm going to set my entry at the high of the order block. The stop loss just needs to cover technically the low of the order block, but I'm going to extend it a little bit past this low as well, just to be safe. What does that look like here? We can do 20 pips. And in terms of target, for now I'll be looking at this high right here, because this is the high of the bullish range right now. So let's play price forward and we'll see if we get triggered into this trade. Okay, so we actually made a new high, so I'm going to extend my take profit here. So that's an 8.4 risk reward ratio. Now I like to see price creating this much range before it mitigates the order block, because that is a form of liquidity. That's not something we're going to talk about in this specific video, but it is another important criteria factor to have when locating high probability trading opportunities. There's a lot of sell side liquidity being built up within this range and within this minor uptrend right here. So that adds a lot of confluence to our trading idea. Okay, so right there we get triggered into the trade. This was our order block here. And let's see how it plays out. Okay, immediately starts creating bullish structure, so that's a good sign. Let's just extend the position out. So very, very minimal drawdown here. This is exactly, excuse me, this is exactly what we like to see. We like to see an immediate reaction and very little drawdown. That shows that this order block has been well respected. Moving along nicely. And it eventually hit the full take profit for 8.4R. So that was a great example of how to choose a really high probability order block just by using this simple order block criteria. Trading does not have to be complicated. In fact, simplicity often leads to more consistent results. The Currency Pros Academy offers the most comprehensive learning experience without overwhelming you with unnecessary information. When you join, you gain instant access to our full video course on simplified smart money concepts, as well as PDF ebooks and an exclusive members-only Discord community filled with like-minded traders to collaborate with. I know you must be tired of searching for the right community and education, so click the link in the description of this video to get started today. We have an affordable, one-time only enrollment fee. There are no unwanted monthly recurring subscriptions. Once you join, you're a part of the Currency Pros family for life. So we're now taking a look at AUDUSD, and we're currently on the 1 hour time frame. Now the reason I'm starting on the 1 hour time frame is to get an overall picture of the structure here, because in recent history here we've seen a clear bullish uptrend, right? But we're now seeing structural breaks to the downside, such as here, for example. And here, we're seeing a consistent pattern now of lower lows and lower highs. So I would like to get involved in a sell trade here. So so far we don't see any imbalance. We do see structural shifts, right? So there's certainly order blocks there, but there's no imbalance. So that doesn't make me interested in any trading opportunities just yet. So I'm going to play price forward and see how this develops and see if there's something I'd like to get involved in. Okay, so right there, we can see that we clearly just took liquidity from this high here and then broke structure to the downside once again. So structural break right here. That's first on our criteria list. Imbalance is next up. And we clearly created imbalance right here between these candles. Okay, so that's going to act as a magnet for price to draw back to this area. And most importantly, we have the order block, which is the last bullish candle prior to this bearish down move. So let's highlight that as well. And we'll drag it out. So before we know where the end of this bearish leg is, let's play price forward a little bit. Yeah, so we keep going down, so we haven't bottomed out just yet. Okay, so definitely right there. So this is our our bearish leg right here. So let's use the Fibonacci tool again and drag it from the swing high all the way down to the swing low. So because we're looking for a selling position now, we want to be looking for an order block in premium pricing, which means above the 50% line. So of course, this order block that I had just highlighted is at the extreme of the premium pricing range. So that's a very good sign. Let's delete the Fibonacci tool now. So that checks off everything from the list. However, this being the 1 hour time frame, if we were to enter a trade on this time frame, the stop loss would probably be quite large. So let's check. Yeah, that would be like a 30 pip stop loss to cover that high if we entered off the low of the order block. So that's not ideal. Let's drop down to the 15-minute time frame and see if we can refine this further. Let me just delete this for now just to clear things up. So we can actually refine our 1 hour zone down to this 15-minute candle right here, that bullish candle prior to the bearish down move. So let's rein this in and label it 15-minute. Let's measure this. So from the low of the order block to covering that recent swing high. Okay, 25 pips could be acceptable. Let's go ahead and set an entry here. This matches all of our order block criteria. So yeah, let's round it to 25 pips. You could certainly get lower. You could put it right at the high for about 22.5 pips, but I like to round things up. So let's do 25. Now, in terms of take profit, all we have to do is we could either target the recent swing low, or we could target an area of imbalance, such as this little order block right here and the imbalance above it. In this case, I'm just going to target the swing low because it looks like the risk to reward ratio isn't going to be that great anyways. So let's aim for that swing low. It would definitely be used as an area of sell side liquidity. So that gives us a 3.81 risk to reward ratio. That's okay. Typically anything above 1 to 3 I'm okay with. So let's play this out and see how it goes. Just ranging sideways, creating a lot of buy-side liquidity. That's a good sign as well. Filling some of the imbalances to the left. Are we going to get tapped in? We are. Okay. Got triggered into the trade there. Very nice reaction so far. You can see that there was almost non-existent drawdown there. That's a good sign. And we broke these minor lows to the downside already, so that's good. Let's see if this low gets broken too. Yeah, right away. Really good sign. This could possibly present even a second entry opportunity, but we're not going to go over that. Stick to one trade for now. Is it going to pull back up or go right to the take profit? Yeah, so full take profit hit there for 3.81 risk to reward ratio. So that's another great example of how to increase your win rate and overall probability using this very simple order block criteria checklist. Let's go over one more example to really nail this concept down. For the last example of today's video, I'm going to show you something a little bit different. So the same order block criteria, but on a lower time frame. So we're going to be entering this trade on the 5-minute time frame, and it's based on the fact that price took out a recent area of higher time frame sell side liquidity. Let me briefly show you that so you know what I'm talking about. So we had this swing low right here, very significant area of liquidity. Beneath it, of course, all major lows and major highs are holding an extreme pool of liquidity. So as soon as that's taken out, it presents the opportunity for a potential reversal. So obviously we have a bunch of bearish momentum leading up to this point, but as soon as price takes out that higher time frame liquidity pool, we can monitor a lower time frame for signs of reversal. So in order to do that, we need to pay attention to market structure. So the first thing we want to look at here is where's our recent low and where's our recent high? Well, our recent low is obviously right here, and our recent high would be right here, because price made a high here, came down to this low, made a high, made another low, right? Pretty straightforward. So in order to locate a potential reversal opportunity and locate the order block that we would enter upon, we need one of these structural points to be broken. Obviously, ideally, we'd want to see the high broken so we can start looking for a buying opportunity. So let's see if we can achieve that. Okay, so that high was broken. That's a good sign. No order block yet though, that's for sure. Okay, that's a much more clear structural break. Let me clean this up a little bit. Don't really have room to put my label in there, but I can still draw the arrow. So let's just leave the arrow there just so it can identify that's where the structure change occurred, okay? So do we have an order block here? We do. This is a little bit clustered. This happens a lot on the lower time frames. You see a lot of smaller candles clustered together, but we're looking for the last bearish candle prior to the bullish move that broke structure. So that would be this right here. So that's the first thing checked off the list. Now, do we have imbalance, or a fair value gap as some like to call it? So we do right here. Between these three candles, we can see that the candle in between, there was a fair value gap, right? So in terms of entry, we always want to be going for the extreme because that increases our odds of success, right? And gives us a better risk-reward ratio. It's overall safer because we know that we're not very likely to be induced into entering early, which means we're not going to be part of liquidity. We want to avoid the liquidity and get in after liquidity has been purged. So some might want to enter off of these small indecisional candles here, but I would prefer to target the extreme, which is the furthest possible order block in discount pricing. So let's play price forward a little bit more because we don't exactly know where our premium discount is yet. Until now, of course. So now that price kind of topped out here and started trading back down to the downside, we can identify that this is our current bullish leg from that swing low to that swing high. Let's just drag that out a bit so it's more visible. And we can see that anything above the 50% line would be premium pricing. Anything below the 50% would of course be discount pricing. So our order block that we've chosen here is clearly an extreme discount pricing. So that's a good sign. So this is valid to me. Let's just label it 5M because that's the entry time frame that we are on. And this right here sums up the whole checklist. The order block caused a structural shift right here. You could also say that this was the structural shift. Either one works, to be honest, in this case. The order block created an imbalance, right? There was imbalance here, and this is the most extreme order block that caused that move. And the order block is definitely in discount pricing of our current bullish leg. So with that being said, let's set a position. So entry at the top of the 5-minute order block. Stop loss would be just below what can we do here? 12 pips is fine. That covers the low of this candle. Technically, you could make it just cover the low of this candle. So you could go 7 pips, 8 pips. I'm going to be just a little bit more safe. I like to cover the recent low or the recent high. Just makes me feel a bit better. So 12 pips is fine. Now, where can we target? Technically, given the fact that this has been such an imbalanced, inefficient, bearish leg back here, we could set our targets quite high, but it's always safer to go after the more modest target. So in this case, I can see that this area right here would act as buy-side liquidity. It's highly probable that price is going to head towards that high at the very least. So if we're looking for a quick intraday trade on a lower time frame, like we are on right now, the 5-minute, 40 to 50 pips, that's pretty reasonable for a day of movement on Euro USD. So let's set the target there. That gives us a 4.08 risk to reward ratio. Not the best, but not that bad either. So let's play price forward and see what happens. Okay, we got triggered in. There you have it. Very quick trade. Very quick trade that lasted from entry to exit 1 hour and a half. Yeah, hour and 35 minutes. So that's not bad at all for 4R. So as you can see, just by following this simple checklist of order block criteria, we can really improve our win rate and overall success in the markets. This is a very simple strategy to use, and I really hope you guys enjoyed this video.